Welcome back to the Click Trading Education Weekly Market Review. I'm thrilled to have you here as we dive into the market movements for the weekend in June 19th, 2026. This week we saw a risk-off sentiment gripping the markets. Investors were reacting to a mix of economic data and geopolitical tensions, making for a volatile landscape, particularly in equities and commodities. Let's break it down. Equities showed a bit of a roller coaster ride. The S&P 500 slipped by 0.27%, the Dow was down 0.38%, and the Nasdaq dipped 0.30%. Commodities were mixed too. Gold took a hit, dropping 1.38%, while crude oil booked the trend with a 1.51% gain, driven by supply concerns. In the foreign exchange space, the US dollar strengthened by 0.49%, pushing the Euro USD down by 0.91%. Meanwhile, volatility measured by the VIX fell by 2.26%, indicating some underlying market calm despite the surface level chaos. Why does all this matter? Well, macroeconomic concerns are hanging over the markets like a cloud. Central banks are in the spotlight, trying to control inflation without hampering growth, which is influencing currency movements. Geopolitical tensions are adding layers of uncertainty, keeping investors on their toes. In simple terms, the markets are navigating through turbulent waters, stirred by economic data and geopolitical factors. Now let's talk about some key market moves that caught our attention. Solana, the cryptocurrency, rose by 3.23%, showcasing resilience in a cautious market. Apple managed to climb 1.56%, highlighting its strength even when the equity environment seemed shaky. Crude oil's increase aligns with ongoing supply concerns. On the flip side, Microsoft saw a notable drop of 4.39% due to sector rotation, while Tesla fell 2.88%, likely from profit-taking after its recent rallies. From a trader's perspective, it's essential to watch sector rotation trends as they can signal shifts in market sentiment. Keep an eye on commodity prices as they act as economic indicators, and remember that the crypto market remains highly volatile, requiring disciplined risk management. So what drove the markets last week? We had a mix of economic data that added to the uncertainty, with inflation figures particularly catching everyone's attention. These numbers sparked speculation about potential rate hikes. Central banks continue to tread carefully, aiming to manage inflation without stifling growth, walking a tightrope indeed. Geopolitical tensions haven't eased, adding to the cautious and defensive posturing from investors. Looking ahead with a technical lens, indices are range-bound, reflecting market indecision. Traders should be cautious of false breakouts in this environment. The Nasdaq and tech stocks are in a corrective phase, moving toward lows primarily due to rising interest rates. It's crucial to look for potential support zones for trade setups. Gold and silver are experiencing a downtrend, situated on the lower curve, which may present opportunities for those watching closely. As we wrap up, here's the trader takeaway. Stay alert to sector rotations and monitor commodity prices as they provide valuable insights into market sentiment and economic conditions. Always manage risk carefully, especially in volatile spaces like cryptocurrencies. Remember, this is educational content only, not financial advice. Thanks for watching, and we'll see you next week.